Merry Christmas, everybody! It's December 2022 and it's the final update for the year. In December 2022, I went on a small shopping spree. Not much actually, because I depleted all my bullets in September, October, November. I've talked about it massively in previous videos. You can go check it out. But in this month, I just focus on Maple Tree Industrial Trust. That's the only REIT I bought for this month because I ran out of bullets. And anyways, I wanted to save some money for I think the turbulence in 2023. So let's look at what's on sale and what I bought. This is the table, of course, that I mentioned previously in our video. Quite amazing how the year turned out. I made this video in September or October period where I was just looking at the volatility and thinking what I want to buy and where. And you can look at the video that I talked about it over here, and it's quite a nice recollection. I went through the video again and I brought back really nice memories. The fear that I felt during the market sell-off, the margin selling waves, and I was like, whoa, what's happening, man? And what should I buy? Where should I buy them? How much capital should I allocate to them? Should I be buying stuff when rates are really rising very fast, and so on and so forth? But looking back, this was a nice table that I made, I thought. And the decision to buy a couple of them, of the REITs over here in this table, actually worked out very well. On the whole, I think the stuff has read it around 10% in general across the board since I last bought them. So I bought a lot of AIMs, definitely. I talked about it over here. I bought a lot of Star Hill. And lately, I bought a lot of Capo, especially given the help from the analysts. They're calling for a sell for the commercial properties, commercial REIT, and I just went in and I bought after a very long time. I think the last time I bought Capo was like more than 5 years ago, man. So it was a nice piece of help from the analysts calling for a sell. So when they call sell, I buy. I bought a little bit of Ascenders and MLT. So I have quite a big portfolio of this few REITs already. And for December, I was just looking at over here MIT, KDC, CLCT, and FCT, and what I should add on. Because I'm quite a big believer of diversification of a portfolio. I want to buy a portfolio of diversified assets at very cheap valuations and hope for good total returns. Hope, because I don't really predict. So out of the four, I ruled out CLCT because I'm still not very sure what the China COVID situation will pan out. I think it's gonna be 4, 5, 6, 7, 8 waves of COVID, and it's gonna be lock and then start, lock, stop, start. It's just confusing. FCT hasn't fallen a whole lot either. So look at it, it's still not really where I want it to be, right? Because I'm looking to buy it below 1.8. It's not there anytime soon. So it was pretty much between MIT and KDC. And I decided on MIT. Mainly because I like the US assets and I like the assets in Singapore as well. So I'll talk about it in a later slide. So I prefer it to KDC actually. But actually both are quite okay to me. So I bought the MIT on the 23rd of December. So it's just the day before the Christmas weekend, right? So it's pretty much a Christmas shopping for me. At 2.2. I took the scrip dividend as well previously at 2.15. But I didn't really buy a whole lot during the big sell-off because there was all this stuff that was on sale here, right? AIMS was yielding 8%, Star Hill was 7%, Capital was almost 7%. And MLT and Ascenders were more than 6.5%. MIT is still very resilient in my mind. A lot of people will think that it has fallen a lot though. But to me, it's still very resilient because because I didn't buy it at a high, right? That's a problem. If you have bought it last year at more than 2.5, I think you have felt the pain. But for me, I never really bought a lot of this stuff. So in fact, I didn't buy this at all. So for me, it's quite resilient. In fact, I was hoping for it to crash a bit more below $2, but it's still not happening. So I just bought at 2.2. At current levels, I think the NDPU is gonna fall next year because of the rising utility costs, rising interest rates. But they're gonna do top ups, I think, out of capital. I talked about it during the recent quarterly update that the manager gave. So I think next year the whole year dividend will be 13.5 cents, well thereabouts. NAV is 1.93, but I think there might be some weakness in the valuations though. So in the next slide, I'll talk about it. So of this kind of aga estimation, I think the next year dividend yield is around 6.1% and 1.14 price to book. Of course, I would love to buy it below book, But if the market is not selling down, then either I wait or I might just miss the opportunity, right? So I'll just buy a small stake over here, and maybe there'll be more volatility next year, and I can accumulate it. I think if the markets continue to go south next year, I'll be hammering this stuff quite a lot for the next year, because I bought so much of this 5 recently. I might want to diversify out more into MIT, and if KDC starts to fall, I'll buy more KDC as well. So it looks like a lot of opportunities to buy if markets continue to be volatile next year. So this is the something that I'm more wary of, and that's the cap rates globally. Because other than increasing rising interest rates impact on the DPU, you must be careful about the effect on the cap rates as well. So if rates go up and cap rates go down, valuations of the assets go down, then that leads to increase in the gearing because of falling asset prices, right? So that spells a lot of problems, especially when it comes to refinancing and stuff. So I'm very careful about cap rates, and I'm looking at this stuff very carefully, especially for stuff in the US, where things are very expensive. So look at the cap rates for MIT. I think it's very conservative. If you look at the Singapore assets, actually for the past 3 years, the cap rates have not moved. So for data centers, high tech, business parks, flat factories, and so on and so forth, look at it for the past 3 years, right? Things have not moved for Singapore assets. So look at it 3 years ago, 6 to 6.5, now it's 6 to 6.5, 5.25 to 6.5, 5.25 by 6.75, and so on and so forth. So cap rates in Singapore are very stable, right? I think the valuers are conservative, and they have not really hiked things up aggressively. If you look at the cap rates in the US, in 2020 to 2021, it was stable, but 2022 was when there was a quite massive compression of cap rates. So if you look at cap rates in 2021, it was 5.5 to 8, and now in 2022 it was 5 to 6.75. So this upper range have compressed by 1.25%, right? So I think I'm quite cautious about cap rates in US assets in general. There are some comments in the comment boxes asking about my view about US offices and US retail. I don't really follow them in general. I don't see a need for me to follow them, especially when I don't really have the time to follow the dynamics of the assets in all the different cities and the towns and grade A and grade B and so on and so forth. It's just too much of a hassle. I'll just focus on a few names and I'm happy with it. So one thing about MIT, I think I like the fact that the data centers, the dynamics are still quite positive, right? So because of that, the cap rates should be quite stable when they do a valuation. Because data consumption is not stopping. If you look at, for example, me, for example, I think my data consumption has exploded ever since COVID. And I don't think I'm going back anytime soon. Even for me, I just started this YouTube channel in July this year, right? Actually, out of fun. And you see how much video I've made and uploaded, right? Each video that I made around, if the video is around 10 minutes long, in general, the video size that I generate will be around 1.5 gig. So can you just imagine how much data I've uploaded to the servers for YouTube, and they are doing it for free for me actually. I'm not paying for the data storage, and I'm just one user, right? One small YouTube owner. How many people are out there, man? And this is just for YouTube, right? If you add on for Meta, Apple, Amazon, Oracle, and so on and so forth, and all the small players, TikTok, and so on and so forth, man, the data consumption, I think, is not stopping. So I think the data center trends going forward will still be positive. But nonetheless, I think for viewers, you should be careful about cap rates in the US. For all those REITs that have bought assets in the past 2 years in the US, you gotta ask yourself, right? If they bought it at somewhere here, the cap rates, and then the rising Fed funds rate causes cap rates to rise to somewhere over here, what will happen to the gearing? What will happen to the ability to refi? What will happen to maybe the a bunch of other factors when cap rate starts to rise? Not just in the US, right? Also for the EU, Japan, and so on and so forth. I think Singapore assets are still stable though. So if you look at the my World Cup dream team for 2023 that I've talked about it over here, a bunch of them are still Singapore based because I think valuers are still very conservative in Singapore. So if you want to venture overseas, be careful of cap rates and whether or not you're buying near the top or very at the top. So Merry Christmas 2022 to everybody and happy 2023.